All right, picking up where we left off now. This is our third installment. Didn't realize this thing would go so long. Okay, as I was saying, as far as the indicators are concerned, here in the Thinkorswim, I'm just using this is the your 5 period exponential moving average. Purple line is your you know what is it 50 period moving average. Then your orange is your 200, if you will. All right, and then these little dots here. This is your parabolic SAR, and this right here is the Kumo cloud. This is part of the Ichimoku um, tool. All these here, you go to, I think it's, you go to studies or whatever, and these are your upper studies because it's on the chart. Your lower studies is this. This is the wild the wilder, what do you call it, whatever, his RSI thing, whatever, and that's what this is right here. So it's just simple, just so you guys can see what I'm saying. So it's just I use this as a tool so that you guys can see what I'm talking about when I'm explaining the price action to you. I found it over the years is helpful for me to explain it. And some of the videos I do, I take them directly off the system, and you'll see those videos too. A lot of my older videos, uh, those charts are coming right off the system. So it has a whole lot of it has all of my proprietary indicators and stuff on it. The only thing that's not proprietary is the Kumo cloud because I did not create the Ichimoku tool, so that's not me. I didn't create any of that. All right, so but everything I do is proprietary. This right here is not. This comes in the Thinkorswim platform. This is what it is. These things are whatever. A note though, I do not use technical analysis the way most people use it. I do not even use the Ichi system, Ikimoku, as most people use it. I just don't. You can read up on it. You can do Google search, whatever, on the Ikimoku. There's millions of stuff about it. There's even, examples, people trading with it on YouTube, whatever. I do not use it either. I don't use any traditional charting methods, whatever, the way most people do. I just don't. Everything I do is all mathematic. Everything is price action for me. I don't. I don't even believe in technical indicators. All right. I believe in technical analysis, absolutely. Technical indicators, absolutely not. There are thousands, tens of thousands of indicators. New ones are being developed and come out every day. I'm sorry. I've been through too much. I've seen too much. I know too much. I've done too much. Um, One of the firms I worked at, that's all we did all day, every day was test every indicator known to man, every trading system, you name it. That's all we did. So I know what works and what doesn't. I know the secrets to a lot of these components and things that the average person doesn't know. I got paid to look at every tick of the market, all the charts, all day long for 12 hours a day. That's all I did was sit in front of multiple computer screens and watch every tick, research all the prices going back to the 1700s. I kid you not. We studied wheat prices going back to the 1700s. We studied the tulip bulb craze, all of that. We looked at prices. We studied price. We crunched every price you can possibly think of. I memorized a lot of prices. I know where the market was at certain years and things like that. The price I just know it because that's what I did every day. I watched every tick of the market for every day. Back before the internet and all this stuff like we have now with online trading and stuff, you had to call your broker to get a price. Phone will ring off the hook all day long. Where's so and so at trading at now? That's what and you have to give them a quote, and that's how it worked. Some of my clients back then, also when I had clients, um, they would, want to know, give me, the data for the day on such and such. And a lot of the old heads that traded commodities, they would say, what's the highest price wheat has ever traded at? What is the lowest price that wheat has ever traded at? Well, you don't have that data because you haven't researched it. And that don't necessarily come standard in a charting package. They didn't just give out, you know, 20, 50, 100 years of data. Nah, you had to go and subscribe for that. You had to pay a lot of money to get that and do a lot of research to get that. And trust me, most of the old heads already knew the answer. They were just testing you to see if you were worth their time to work with. But they already knew. Trust and believe that. So that's what that is. So anyway, I'm moving on. All right, the next one, Buck Passer 55 says, "Hi, Mr. D. I just heard you on another channel. I've been looking at some of the lower price under $10 gold stocks, and their PE ratios are at 90 and above. Ouch. I still might buy some this week, but was wondering about these gigantic PEs and whether it might be best to go into the SILI and SIL. Okay, I'm sorry. He's talking about the SILJ and SIL, the silver miner and the junior silver miners, and the GDX and GXJ. What do you think? Plus, I just looked at two bigger gold stocks. Their PEs are 293 and 403. Wow. Okay. Well, as you know, because of the way the world is now, PE ratios don't mean squat like they used to back in the 80s. They stopped meaning something in the 90s, to be honest with you. PEs went out the window in the 90s. It's just how it is. So pay no attention to the PEs. It means nothing. Pay attention to the price. Price pays. You can do all the fundamental analysis you want. You can do all the econometric modeling you want. It will not pay you a dime. Models don't make money. Price does. Follow the price action. Pick your favorite thing and just price it out and trade that way. The easiest way would be through the ETFs, the GDX, GXJ, SILJ, SIL. Those are simplest because it covers the whole gamut of that space. So it's easier than having to keep an eye on 50 or 100 different, stocks when you can just trade the index. I mean, that's a no-brainer. For your sake, I would just stick with the GDX, GXJ, and the SIL and SILJ. Why not? You can still do what you need to do. You can still make money. So yeah, I would keep it simple. So hope that answers that question. All right, what do you think about China buying all that gold? That was part of the reason a lot of people said the COMEX was not delivering physical. Oh gosh, man. Okay, I've dealt with this time and time and time and time again. All right, let me help you all out. Let me answer this one. Okay. The COMEX is not going anywhere. All right. Here's how this works. All right. Futures exchanges. They have warehouses. These warehouses hold physical commodities. Corn, wheat, soybeans, oil, you name it. They got a gigantic, ginormous tank farm down south. I forget which state they have it in, maybe Texas. I don't remember. But it's a huge farm, and the stuff is just sitting there waiting to be delivered and picked up, man. All right? That's how that works. Okay. The reason why the COMEX is not going anywhere, aside from rampant fraud or abuse or something like that, outside of that, it's not going anywhere because it protects itself. How does it do that? Well, first of all, you just don't open a commodity futures trading account and say, I'm taking delivery. Oh, no, sir, no, ma'am, you are not. In order to set up that type of an account, you first need to fill out paperwork. You have to tell them if you're a speculator or if you are a hedger. That's first and foremost. If you are a hedger, that's something totally separate. That's a separate type of an account. You have to go over a whole mess of stuff for that. All right? There's a lot entailed in that because you're saying, I am opening this account because I intend to take delivery. Period. Right? So that means you're filling out paperwork so that that means you have the money set aside already for storage, for insurance, and for delivery. That means that it's already been worked out ahead of time. You have the monies there that's set aside so that you can take delivery. So it's not a question if you're going to be delivered upon. So you're in a special account at that point. You're a hedger or whatever. You're a user, producer. You're an elevator. Whatever you are, you're saying, I need to take delivery. Okay. So all that's already worked out in advance. All right, and it's extremely expensive. You're not going to open a $10,000 account and think you're taking delivery on anything. All right, doesn't work that way. So with that said, that's why they're not going to go default. All right, that's one reason. The second reason is because not all contracts are deliverable. You need to read your fine print. Not all contracts are deliverable. Once again, not all contracts are deliverable. Read your brochures. Most speculators trade contracts and they get out of them because they did not sign up to take delivery. They're not registered with the CFTC and with their broker to take delivery. So anyone trying to holler at the end of the day, I want to take delivery, you will be ignored. All right? So if you're trading something that is deliverable, all right, and again, not all futures contracts are deliverable, but if you're trading something that is deliverable, what happens is you have to be out by first notice day, first trading day, last trading day, etc. So there are time periods that will come where that contract is due to expire. It's going to roll over to the next front month, and you have to be out of that. If you do not get out, they will simply take you out. It's just that simple. You are liquidated at that point. Furthermore, there are laws in place that say that the contracts are settled in cash, such as the S&P 500 futures contract, the emini. That is settled in cash at the end, okay? You're not taking delivery of anything. Again, not all futures contracts are deliverable. There's nothing to deliver for you if you're trading the Dow futures, the NASDAQ, the S&P, the Russell, the Nikkei. There's nothing to deliver to you. All right, those are financial instruments and they are settled in cash. That's how it works. So I don't care what the price of gold futures go to. I don't care if gold futures are $10,000 an ounce tomorrow morning. You think everybody's going to be screaming, I want to take delivery, I want to take delivery? I don't think so. You can scream until your lungs fall out. You're not taking delivery on nothing because your account wasn't set up to do that. All right, capiche? Are we clear now? All right. So with that said, not all contracts are deliverable, no matter how many contracts you hold, and there are contract limits to everything. You can't just come in and corner a market. All right. You can try to be like the Hunt brothers with silver all you want to. That's never going to happen again because they won't let you. There are what is called contract limits. You are not allowed to corner any market. Never ever again in the futures market. You can't corner jack. All right, you can try all you want, but there are limits. You can't do it. It is impossible. They won't let you. All right, so that also protects the exchange. All right, in addition to that, there is a certain limit on people opening up accounts to take delivery. Also, because it is so enormously expensive, the average person can't do it anyway. Unless you're a big industry player, you just can't do it. You're not going to be able to do it. Most people, if they needed to buy gold and silver, they wouldn't go through the exchange in the first place. They would go to places like nymex and other places online where you can buy gold and silver coins and bullion. You're not going to go through the exchange level. Why would you do that? Because unless you're a dealer, unless you are some type of producer or elevator or something like that, grain elevator, so you're not going to take delivery. That's ridiculous. So you're going to let them deliver to you, 100,000 tons of gold at your front door? Come on, please. Come off of it. So all this stuff about the comex defaulting, and it's nonsense. It's the most absurd thing I think I've ever heard in my life. All right, barring fraud. All right, like someone doing something they're not supposed to. All right, that can happen. But the paper market in and of itself is not fraudulent. All right, speculators exist to add liquidity to the markets. Guys and gals, it's commodity futures 101, market dynamics 101. Educate yourself. All right, it's not that hard. It's not rocket science. All right, It sells books and videos and fills up seats at people's conferences talking about the comex default. Oh, it's going to default this time and that time. They keep setting dates. It's not happening. It's not going to happen. None of these exchanges are going to default. None of these commodity exchanges, okay? Period. To say that the commodity exchange is defaulting is to say that that is the last day you will be eating. I'll just leave it at that. You don't want a default of any kind. If it does happen because of fraud or some type of terrorism or whatever the case may be, you better hold what you got, because you're not going to be able to eat for a very long time. And we will leave it at that. Moving on. All right, the next comment says, brother, this is from Luke Carter. Brother, it says, okay, so brother, I'm asking you, would you check out Pastor Charles Dow of Straightway? He has over 2,500 videos on YouTube, as well as his own site, but I can hear some of the things he say coming out of you. I respect you very much, sir. I believe you are a busy man, but if you have time, give him a listen. I am a new sub to your channel. Much love, brother. Shalom. Okay, this is an easy one. First and foremost, I do not know Pastor Dow personally, but yes, I am subscribed to his YouTube channel, and I've been a subscriber for quite a while. So yes, I'm familiar with him. When you say check out, yeah, I checked him out. I don't necessarily agree with him on everything, but I like his spirit. I like the way he enters and engages into the marketplace of ideas. He's always open to friendly conversation and friendly debate and stuff, even with people who don't agree with him. He's never been disrespectful or abusive like a lot of other people in channels I've seen. They're just straight up militant when it comes to what the things they believe and why they believe them, and they're not open to friendly discussion or debate. So that much I will definitely give him, and I'll say that because of that, yeah, I like him. I subscribe to him. I have no problems with him at all. So thanks for bringing that up. Yep. All right, next one. Hello, can you please do analysis on AXU, Alexco Resources, and NAC, Northern Dynasty Minerals? Yes, I did. That's been included in the daily videos. So if you haven't checked that out, check out yesterday's video. You'll find it in there. All right, the next one. I want to learn how to do what you do. I'm 55 and done killing myself for a lousy $75,000 a year. They never taught us this in school. Surprise. Glad I found your channel. Okay. Hey, I get that a lot. It's a lot of people that are in the 9-to-5 rat race, and they want to be able to, have alternative means of income. And that's why I stress to people to get involved in the markets. The paper markets are there for that reason. I can't tell you how many people have become well off, trading these paper markets. Do you know how many multi-millionaires the 1990s created? My goodness. All because of the markets. Not everybody went bankrupt when the NASDAQ bubble popped in 2000. Some people actually got out and were a lot better off. Some people never returned to the markets again, and they still have their wealth. I'm just saying, don't play yourself, people. You don't have to have a lot of money to get in the markets. Let me tell you something. True story. When I first started, working on Wall Street, I specialized in small accounts, and you would not believe that no one wanted to take small accounts. They didn't. A lot of the big, players, man, if you had less than 100 million, they wouldn't even talk. You couldn't even talk to them. You couldn't even get in their presence. And they considered a small account 10 million. They wouldn't talk to you. You know what my specialty was? You're gonna laugh. You're gonna laugh. Are you ready for this? My specialty was taking people with $1,500. That's it. They had $1,500 that they could spend and use as risk capital in the markets. That's what I specialize in, keeping little people alive. That's what I did. I helped the little guy. Yes, that's what I did. I've done videos here on YouTube showing how a little teeny man or gal can open an account at a place like O&A and make decent return on their money. Yes, there are brokers out there now that allow you to manage your risk down to the penny. You can trade a penny a pip. You can do it at equities too. You don't have to buy, 10,000 shares of a stock. You can buy as little as 10 shares of a stock. Straight up. You can buy 10 shares of Google or Amazon or Apple, and those stocks traditionally can have, $70 moves in a day. All right? And you can still make money. You make a better return than if you put that money in the bank, that's for sure. So all I'm saying is learn to play the game and you're going to be all right. And if you want to do options, you can do that too. Particularly, I don't really use options like that much. I will in certain occasions. There are certain techniques like the jackass trade that, and it's not the profanity term jackass. It's the donkey or mule jackass term. It's called that because it's a stubborn position that allows you to stay in a position, even a losing position, and still make money. You can be wrong about the direction of the market, be literally getting your face ripped off, and when you unwind the trade, you actually walk away with money, even if it's a small profit. I'm not kidding. It's a trade where you literally can't lose any money. And I've done that along with teaching people the 2-bar Charlie method, and I'll bring that back. So yeah, we'll be going through that. Anyway, this one's getting long in the tooth too, man. There's so many questions, and I've been trying to deal with each one as much as possible. So we'll keep it moving, and we'll do some more Q&As. But like I said, if I didn't get to you, if I didn't answer some of your questions, you can go ahead and leave questions and comments at the bottom of this, in this video, and we'll save it for a future Q&A. All right, everyone, be encouraged, and thanks for listening.